time we talked about, what is a market? Market is just there to facilitate the auction, right? It's just like any other market that you guys have been to. It's just that this one is highly complicated and the number of participants in the market is pretty high, especially lately. You have, high frequency traders. You have the retail, then you have everything in between. So it does make it a little bit more complex than, you go into a marketplace and buying oranges on Saturday morning. It's only a transaction of two parties. Here you have a lot more. You have lot more offers, a lot more bids, a lot more complexities compared to what you guys have seen before. So market auction theory, we talked about this. Is there any questions on this? I don't want to spend too much time so that way we don't recover. Does everybody understand what this means? If you don't, just raise your hand. We can cover it. It's simple, but very important concept for you guys to understand when trading.
I think we're good.
Okay. All right. So this is the chart that we used, right? That we talked about the lowest offer, highest bid, as mentioned in the previous slide, right? The second bullet says, hey, this is what you're supposed to do. You're supposed to find the highest bids with the lowest offers and match them to create orders. Market does shift, right, between balance and imbalance, imbalance being the inefficiencies, right? And that's something you guys will correlate here shortly on market profile, hopefully. The dealer, the local, is just there to match the orders, right? If there's no match, then there's no transaction. Once there's a match, trade is executed. If you guys use order flow or any type of DOM, service, basically, well, our goal as traders, because on the bid and the ask, it's not really easy to, say if it was only, aggressive buyers on the ask and aggressive sellers on the bid, it'd be a fairly easy market. But there's more complexities to it, right? Was the seller trying to get rid of the inventory or was the buyer trying to get more? That's something that's related to the context, right? And that's where you can use maybe market profile, volume profile to help you kind of identify what is the market telling you so that way you know how to react to it as a trader, right? It shouldn't be that you guys are guessing, but it should be more that you're reacting based on the concepts that you're going to learn. Market behavior, I think this is a fairly important slide for you guys to understand the balance and imbalance, right? Lately, we've been, going into about 2-day balances, right? Like this one here, you enter the balance, they trade inside of it, then they, just yesterday or a day before, I'm sorry, Friday, we peaked above the balance, we failed back in, and then we were targeting the mean, which was the POC, I believe 91, and then the 87, it went to the bottom. But the market, if it's going outside of the balance, so if it's trading inside this balance and then let's say it pops, this is called the inefficiency, right? Market believes the price is higher, and then when they come back to it here on top of it, it has to hold. If it doesn't hold, there's a very high chance, 80% or more, that they're going to traverse and go back to the bottom. And if you're a trader, right, if you're new, if you just wait for these type of setups, you can make a living on it. And it would be, very good for you to learn this and to practice it and just try with one model like this one. So that way you can sit and wait and see how it works. And then you can look at your logs and see if it's efficient for you or not. Most of the time it would be, right? Like I said, if they're not able to hold this, that means the price higher has been what?
Rejected.
Yeah, that means price can be rejected. And if they bounce here, that means the price can be accepted and you're looking for higher prices, right? Is there other clues that you can combine in market profile, for instance, to give you that this would be a good long? Well, let's just say that this was a poor high, was left here. Right? If you have a poor high here and then you auction away from it, that means we had some, no buyer's interest here, but they'll come back and revisit. If you see something like that, like where you have a poor high and then you come back here, that's not a bad opportunity to take, right? Was there anything like this recently that you guys seen in the market?
Yeah, Friday.
What happened Friday?
We went way above the balance that we were in.
Anyone else? When we were trading live, we talked about it. I think it was Shamu and me. You guys remember what happened here? Let me highlight it. So, didn't we highlight
They
this
held it.
or low, right? And then we said the odds that it'll be a really high spike was pretty low, but nonetheless, they did what? They spiked it, right? Because throughout the day, they left a poor auction intraday here and below here. If you guys remember, we had some single prints in between here. Somebody go on mute, please. They came back and they revisited that poor low. And is it common that they fix it the same day? Yeah, not really. Yeah, somebody has to go on mute.
It was solo.
So it is not very common that you fix the poor low immediately, but typically 2 to 3 days they'll come back and fix it. That they came back because, you know, when you look at the whole range that they had for that day, where a majority of it was set, it was between 14 points. So when the range is shorter, the odds are higher that you can revisit the extremes. If the range is wider, the odds are that you're going to have other time frame participants or other participants come in and find the level where they can defend it. Does that make sense?
Yes, Shorty. So they didn't go all the way up above and hold it?
Well, I'm just talking about when the range is super high. If this range was, let's say, you know, that day, where was it? Like here, we had the range, you know, for majority of the day was about 14 points, which is here. So when you went up and you failed this level here about 99, the odds are very high that you can go back at least and touch the lows and fix it. Does this show aggression on selling with two TPOs on a spike? Does everybody know where the spike is here? Is there anyone that doesn't know what the spike is? Because that's part of our, I guess, summary, what we've covered so far.
Can you go with the spike again, Shorty?
Yeah, we'll cover it here shortly. So the spike basically is when the last period, M, make sure you're on RTH, when the letter M makes a lower low compared to any other period. And as you see here, A was a fairly low, right? And E matched that low. So equal lows between the two. The next period, let's say L, if L made lower low, then L wouldn't have been the spike. But M period making a lower low compared to any other period, that's what the spike is. In this case, this would be a bearish spike here. So this poor low was cleaned up in the M period. And the only reason why we call it a spike, because how many periods do we have after 4 p.m.?
Like 15-minute, one
Yeah,
period.
that one doesn't count. That's just a settled period. N period doesn't count. So there's no periods after M. Therefore, you carry it forward. And we play that as a setup the next day. Let's say on Monday, tomorrow, if we open below the spike, that would be somewhat of a bearish scenario. But the spike being two TPO periods wide is not a really confident one. That doesn't mean there was a lot of aggressive sellers trying to liquidate the longs. You know, they stopped and they immediately kind of recovered, if you guys recall. Right, they came and then they brought it back up and then they came back down to it. The only problem with this setup for tomorrow is what? You have to look at the context and see what's going on, because that's going to be part of your, I guess, analysis you have to do using everything. So here's your Thursday and here's your Friday. Why is it a problem to be immediately bearish right here below the spike?
We're still in balance.
You're still in balance. Is there anything else? And when you say balance, tell me more. How do you know that?
Just looking at the value area, you know, in relation to, you know, if you look left a little bit, I mean, we're
Yeah.
trading kind of at this same level.
Yep. And another thing that you should add to that is that here you have a nice division of that balance, right? You have the single prints here. So you have single prints here, right? That create a nice little separation of value for us. And that's right here. So you have these single prints that are saying, hey, we're really interested in this price to be higher. And that's what that is. Single prints means an efficiency. And single prints act as support and resistance. So now when you look at it, the odds are, right, maybe we go here, maybe we do something like this, and that would mean what about this? If this happens, what does this tell you about here?
Price acceptance.
It would be price rejection here, and they want to go higher. Most likely, they're going to go to the top. Does that make sense? This means you're rejecting the price to the bottom. And that would also mean, right, when you talk about the Thursday day, is there any other important information the market's telling you here?
They're in consolidation and they like that value. It's like one big distribution up on top.
Anyone else? So just to kind of, because there's a few things that we covered last class. One, we have a P-shaped profile from Thursday. You guys all agree on that, right? Which means short covering or bullish price upwards as you reject lower prices swiftly, right? And I would say that's what happened here, right? Pop. It was almost kind of open, reject, reverse. It came out open, lower prices, and then pop higher, right? And it was right off the value area high of the prior day. What else do you see?
And they're holding those 4 lows. All the POCs are lined up.
Not a lot of rejection on top yet, so we still could see higher price action.
Yep. I mean, the access is low. That's great. Does point number 2 make sense then here, everyone?
Quiet bunch this weekend, huh?
Say it again.
Quiet bunch this weekend.
Yeah. Well, I just think it helps when you guys work on it together because you'll see some things that you might not be able to see on your own. So you have a P shape so far. You had the access on top here, right? And you see how price rejected it, right? They tried to go up top, so there is some little bit of access, but not much, right? And then access not really here. It's just 2 TPO wide. You see the poor lows, buy the spike. Not the ideal spot short because you're still in this top distribution, right, of that Thursday. So it seems like you're still accepting prices higher. If they were not accepting prices higher, where would the price be closed on Friday?
Below single prints?
Yeah, it would have been somewhere around here, right? And then you can see that this IB from Thursday that's sitting here, right? If this IB is broken, let's say on Monday, if they get back inside and the bulls are not able to reclaim, the odds that you're going to clean this up to 51 are pretty high. And how do you know that?
It's a skinny valley.
Yeah, it's Skinny Valley. There's really, this was just one large inefficiency. This was your A and B period here, and then the C period caused the single prints. So this is where, a lot of times, whenever you have something like this and price rejects the price where they try to go, these areas get filled quickly. And then, we had some gaps, in between here and here. So I wouldn't be surprised if they come back and go all the way here, because take a look what happened prior to that. I'm just gonna zoom out a little bit. We were in a massive balance, right? Like pretty large balance here up until this point, until the gap and a retest. So if you think about this, if they fail right now on the bottom, the odds are we're probably gonna visit this balance again at 65.20. Does that make sense? So this level is pretty important for the bulls tomorrow. They lose this, most likely here. They do not want to lose this level here because this could be pretty dangerous, right? If they lose this, the odds are then you're going to go to the bottom of this balance, which is about 160 points away. Does that make sense? Because this is, when you think about what we just talked about, this is a large balance, and we're trying to auction higher. So now when they come back, this is going to be the key question. Are you going to reject? Are you going to accept? You reject here, then this is not a bad spot. Maybe catch some puts and drive it all the way to the bottom SPY or whatever your preference is. Okay, so does that slide make sense? Does the spike make sense? We'll talk about spike one more time today. So
Yes.
okay, so just value acceptance rejection. I break it down again. You do want to be aware where's the next balance, right? And market's multi-dimensional, multi-time frame. So when you guys are trading, right, or doing analysis, you can't do analysis on 5 minutes and say, "Oh, I got it. I did my analysis on 5 minutes." Right? You do have to look at it on higher time frames. Just like here, if you go on day, here's our daily analysis, right? And you can see that there's clearly two values being created, right? There's one being here, and then there's one being kind of right below it. So it's almost like stairs that you're building. Right now, can they hold this value? And if they don't get inside of this, most likely we're going to build a new value and search higher. So it's important that you look at it, right, from different time frames, right? If you're looking something at 3 minutes, well, your trades might be short-lived, and you have to kind of handle your trades in such manner, right? How much price range can 3 minutes generate versus a day, right? Or multi-day balance. So that's how you have to trade. A lot of people make that mistake. I've seen people where they're like, they're trading 1 minute chart and then they're expecting a move of 30 points. The odds of you catching a balance move to imbalance between, let's just say, if you zoom in here, this is a pretty bad example, but let's just look at this one. Here's your balance being created, right? If you're trading 1 minute, well, the best thing you can do is look at the range that it was in. So 7.5 points. Well, you can expect 7.5 points. And there's 775. So if that's how you're trading, you have to understand that your time frame reflects how you should trade it as well. You cannot trade this and be like, okay, well, 7.5 points. Now I need 30 points for my trade. Well, most likely you're not going to get it, and most likely you're going to be aggravated with the market, and you're going to feel like the market's playing against you. In reality, it's not. You're just not being realistic. So far, everybody understands initial balance. You understand, hopefully, TPO, market spike and pour low, and then the selling tails. Let's say this was a selling tail. In reality, it was a spike. So if you guys look here, somebody asked, I don't understand the spike. You can see here the letters E, L were together, and then the M period made higher high. So this was our spike, if you guys remember, right? So the spike came, and then of course we closed below the spike. So that's telling us so far the price is not being accepted about this bullish spike, right? As the close happened somewhere near the bottom. And we had a bearish spike on a, I would say, neutral day, right? There's not a lot of other time frame participants shown here, but this guy here is obviously winning so far in terms of, this spike here is not being accepted. It's rejected. So now this zone becomes critical. Even though you have this spike, but 2 TPO spike should not excite you too much. If it was a spike of like, 10, 15 or more, less, between more than 4, you should be excited about the spike. Does that make sense? So this is your key zone. Even though the market's giving you some information, you have to be aware of it and what it means.
Sorry, question.
Mhm.
How many ticks per row is your TPO?
This one is on 4.
Okay, thank you.
Yeah. I typically adjust that. That's a good question. I typically adjust that based on volatility. And at one point when Trump was talking tariffs, I had to go on 8 ticks just to make the chart actually work. The higher the volatility, the more ticks you have to go. So this one is on 4. I tried on 2 and 3, and that did not work. So I'm sticking to 4 for now.
Um,
there a question?
Sorry, that was an accident.
Is anyone confused about this slide? This is especially in bracketed markets, and just like Friday when we traded, this is very, very important for you guys to understand. Does anyone not follow this?
I do have a question though. So during the day when value is building, the responsive buyers and sellers, how long do we give them to kind of like jump in?
I typically watch to see what the C period does, right? Once the initial balance is set, I look up, to see, hey, are you going above? Are you trying to extend, right? And extensions come in typically in C period. I want to see if, they're interested by rejecting the initial balance. If the initial balance is cracked in C period, that usually means they're going to be in the search of the value shift higher or lower, depending where we're going, right? If it's trying to auction. So if you look at this period here, let's take a look at this. So in this period, or this day, Thursday, you see the initial balance is here, and then you see the C period kind of cracking that and making higher highs. In a developing, I would say day when it's starting, this is my key to see. Typically, when C period cracks above this, there's a very high chance you're going to have a trending day. So in terms of value, they're trying to shift it. They should shift after the initial hour. If they don't, they might have some peaks. Let's say the C period, went above. That would tell me a lot about the value that was trying to go here, but they didn't have buyers. Most likely the value is going to be built here. Odds are that they're going to go below here. And if they reject this, then you're going to have most likely a D-shaped profile. So in combo of other things, I pay attention to, of course, previous day value, right? Where are we in relationship to the previous day value? Are we rejecting or accepting it? For instance, the whole day here analysis would be that this was our value created here. And just like the example on the PowerPoint, we came up here, we came to the bottom. This was your signal, them rejecting it. You don't have to go immediately long here, but they're rejecting the value here. So that was a clear sign that they're going to go, and then you have C period, indicating extension upward. So I would say there was clear signs in this scenario that it's going to go higher based on initial balance, prior day value, and then basically a shift. That some people think it's bearish. It's still very bullish here. There's not much bearishness in terms of value shift because it's shifting nicely upward. As you see here, the dark colors, they're all shifting properly. Does that help answer or?
Yes, thank you. I was just I get confused, like, because I would always look previous day value, and then when it reaches that area, I'm like, okay, when should the responsive people jump in?
So
And
typically you
especially,
want them to defend the value area highs or range high. The last resort is that they got to reject getting inside the value. Otherwise, you have the 80% rule to the downward price action.
I see, thank you. For rejection, is it like less than 5-10 minutes, or you wait for the candle to close to kind of help determine?
So for price to be accepted, right, it's typically the initial balance, right? Meaning you want to know, it's usually just, traders will adjust based on 30 to 60 minutes. If you can spend 30 to 60 minutes above a value or a range, there's a high chance that you're accepting or rejecting that value, whatever that is. When I'm trading intraday, I probably look between 5 and 15 minutes to see how we're trading, if I'm scalping or taking smaller chunk of points. If I'm planning on, giving them higher points, as a stop loss or a range, then I'd like to utilize 30 to 60 minutes to see if you can hold a period or balance or outside of balance.
Thank you.
So this chart's pretty important, right? You want to know where the advantageous sellers and buyers are, right? It's important to know this so that way you're not, as an individual retail trader, if you're coming in, let's say on the access somewhere on a really good value, let me bring up the candles real quick. I'm going to hide TPO just so you guys know. The other way around. So let's take a look at this real quick. Take a look at this. So if you take a look at this box that was there, where was the advantageous buyer?
At the bottom.
So when something goes below value, it becomes advantageous, for buyers. If something goes up above value, it becomes advantageous for sellers because you want to sell at higher prices, right? And that just kind of keeps going, right? And it repeats a lot. And here's another scenario where they came in, and then you see a bullish, I would say, engulfing candle here. They tried. Then you have another one that's, a tiny balance being created here. And you can move on and on. And here's another balance. There's like a multi-day balance being created here. And anytime the price pierces, right? So the way I think about it is when you have these prices like this, let's say you're trading in here and here, here. If the price goes above below here and it finds a way to get in, this is your opportunity to go long. Opportunity to go long and target the top. And this is the identical setup that we traded on Friday, if you guys recall. Does anyone remember what the setup was?
Yeah.
Sorry, yep. Fix for low by dipping below value. Go long. I think I was long 84.
Yep, you took it 84 and I didn't get filled, if you remember.
Yep, and then
Wow.
rip it to the POC at least, if not value area high.
Yep, and that's exactly what happened. If you guys look here, so let's just take a look, right? So here's your low. They came back in. They kind of reclaimed. And if you guys remember, I had that 2-day drawn like this. I don't know if you guys recall, but on that day we had something like, I think it was 87 and a quarter, but maybe it shifted or something. So here's 87, and we said, hey, go below it, right? And I was targeting to get filled a little bit lower, and I didn't. I think Shamu took it 84 and some change, and he got in, and then he drove it. And then I mentioned, once you go above this value here, I'd like to actually short it, right? The idea was go above this value, and I took that short and I drove it back down. I think it was 5 contracts. It was a nice trade, and it paid off 2 times. Same concept. Especially when you're trading, you're setting up and you're slowing down as bulls here. They're just taking a breather, guys. They're not. This is not a bear scenario at all, right? They went above this high. They failed. There was some sign that they're going to take a break here. I was actually short slightly below sooner here. I believe it was 603. I think Ashley had a different level when she took a short, but we took that short, and I was targeting, I believe it was 91 at one point, and then 87 as the second point. Same exact setup, guys.
Sorry, one question. So on the chart that we were seeing earlier, so we dipped below and then we came up. So we were looking at the developing value area versus the previous day value area. Is that right?
I had 2-day value. I was on 2-day value. Yeah, I was using 2-day, right? So I think it was 87. I can go back to my chart. It was 87 and a quarter that I was after, that I was watching dip below and go. 2 days was, of course, taking account the Thursday plus this day, and I think it was the last period. So the opportunity for a value to shift in the 30 minutes, it would take something really bad to happen or good to happen. So that's why I was using 2-day. It was just bracketing. So anytime a brackets or coming to a bracket, I use multi-FVP to draw it. I rarely would say that, do I look at, of course, today's value in comparison here? Yeah, of course, I'm gonna take a look at it. Do I rely on these levels to buy it? I would say probably not, right? Developing value can't shift, especially if it's early in the day. But 30 minutes, or maybe it was less, it was like 20 minutes before close, that value is not shifting much. It would take a lot to shift it.
And then you're using SVP?
No, FVP, so it's a fixed range volume profile. So if you go here on their left, there's one called fixed range volume profile.
Yes, yes.
I use that one. So I basically just draw 2 days, and then I'm able to see, and you can hide these now. And now we'll give you a really nice picture of how the market traded within this, right? And it's giving you a perfect scenario is what we just talked about. Peak below, go to the opposite, right? And then peak below, go to the opposite. When above, try to accept, and this is your opportunity to go in on this candle right here. Stop loss maybe somewhere here, and you target the bottom. And then once this got in, this was a great opportunity to go back again. So
And then
that's
for
what you do. One bracket. Mhm.
And then we do this. We can do this on a multi or a broader range as well.
Yeah, definitely. Yeah, definitely. So, I mean, if you go back what we just talked about, so some people fail to see that kind of. So here it's harder to see. Sometimes if you use Ashi candles, you might be able to pick it up sooner. So here, does anyone see any market balance here? So let's say this prior high. You guys see, let's say this high here. And this pretty decent balance. And then you can treat this right here because it almost has two taps. Usually you want two taps to make a range, two taps high, two taps low. So here's one, here's two. So this was a range, right? So now you know where your range is sitting.
In the book that Shorty and Rockets recommend by Trader Dale, he goes over fixed range volume profile and how to use it to both enter and exit trades on smaller and large time frames.
Yeah.
Thank you.
Yeah. So I mean, go ahead.
So the FVP, you didn't use that to determine this the 4-hour range that you had drawn right now. So
I
this is
have,
just
yeah.
purely based.
No, I have when we were inside the range. If you guys remember, we used this to determine the 6, right? Because from this range, for instance, on a larger time frame, I typically draw, right? I would say, my first standard deviation was sitting somewhere around here at some point. First standard deviation on the bottom, and then the mean or the mode, whatever you want to call it, the CPOC, sitting at 64.10. So I do mark those on higher brackets as well. The higher the bracket, the more explosive the move will be, right? The longer it lasts.
And sorry for the basic question. So when we say sig1, is it the low or the high, right? Is the
So
value
if you think about bell curve, right? So the bell curve sits something like this.
Mhm.
First standard deviation is here, and your second is here, and your third is here. So 68% of volume or time spent is here. Then you have the 95. If you add up this, plus this, will be the 95 and this. So now if you're to rotate this chart, I'm just saying that 68%, you can call this Q1 positive, negative skew, or however you want. So this is my first standard deviation, second, and then you will have the third one, right, which should be about 99%. So that would be the standard deviations that you would have, if that makes sense. And I have a chart I can show you. It's actually volume profile. Let me see if it makes sense.
And using FVP, we can get those second and third deviations as well on the
Yeah,
chart?
yeah. So I'll show you how to do it. So let me show you guys. So where did they go? Hold on one second. Lost my. Let me delete this. So if you draw your FVP, let's say this was the bracket that we're interested from here to here. So if you click on it, double click on it, I'll show you under input 68%, which should be your first standard deviation. So if we just mark this right now, we're going to mark this as our first. And I just have it pre-saved, so I don't have to type it out every time. So this is our first standard deviation, and this would be our CPOC or mean right here on modems, right? And now if you go here, and I can change it, I just pre-saved it, right? And I can change this to 95, or you click here and you change it to 95. Now it's going to give you the volume within the second standard deviation and where it's that at. So now I know this is my second standard deviation. I can just apply that. And interestingly enough, it bounced perfectly 2 times there. And then the third one, you could double click on that, change it. Can't put 99.1, but 99 is pretty good. And this will be your third standard deviation of this.
That's 99.5%?
99.1.
0.1, right? Okay, thank you.
So, where did the buyers show up? Where did the sellers show up? Well, within, between second and third standard deviation, you do not want to be a buyer on the upside if this is a bracket. You want to be a buyer between second and third, and that's kind of what happens here. You don't want to initiate too many transactions around POC, especially in the bracketed markets. That's not the best spot to initiate because it leads to choppiness. And if you look here, look at this. Choppy, I don't know what you want to call this, nasty. And then some movements here, right? So that's how you would define these, right? But this only works in the bracketed markets when you're trending up, right? So let's just remove this. So if you look at this whole trend up, right? Somebody was talking about a volume accumulation setup, right? So there's a setup when you're using volume profile versus, analysis on market profile. You see that this was, I would say, this kind of crowded low. What I like to do is I find the first or last candle of that, and I go from here to here, and then you're able to see where's your high volume node, right? So if they're to retest on this point, volume traders would go along here, right? They would come back here and say, hey, this is the highest volume. When you come back here to this level, we can expect buyers and we should be making higher high. If we are not making a higher high from this demand, what does it tell you about this POC? Well, maybe it wasn't all buying, right? Maybe it wasn't all accumulation on the buying side, and then I would just kind of draw a little zone here. And this will be the level that you're looking for long. You lose it, there's a very, very high chance you're going to be looking for the next value to see how it holds up. And the next value is sitting somewhere around here. Right, so they're most likely going to go here through this LVN, come back. You have some things in the way, for instance, here, prior all-time high. So that's how you would use whoever mentioned Dale volume profile and how he uses it, right? In terms of accumulation, high volume nodes, that's the setup to be used, right? And can you do this on 1 minute intraday? Yeah, certainly, right? So if you take a look here, so here's, for instance, let's say from this accumulation here, you're looking at this down and don't extend it. So now if they're able to come back, let's say the idea is if you're able to come back to this level, 66101, that it might be a decent short here. But if you look to the left, this is just a nasty price action, right? I mean, the whole day is like tiny movements, compression, look at this, compression and up. So if you look, for instance, this was, I believe, around 2 o'clock. Take a look at this, right? If you take a look at this accumulation, and what people would say is if you grab this to here, you find the POC high volume node, as you come to it, that becomes your long. Does that make sense? And I would say
Wow,
the
that's
same.
pretty precise. Wow.
And most of the time that works, right? But you have to understand the trend and you have to understand the behavior of the market and which way is it trying to go. For newer folks, I would say 15 minutes, probably, start off on 15 minutes. So that way you don't get too many, I guess, negatives in your trades, right? So here's this, if you grab this from here, let's say to this high, because this is just an accumulation itself, you'll be able to see that, hey, come back to this level, let's say 6502, and it might be a decent long here. The accumulated, and even if you drag this guy here, that POC should be somewhere close by, and here it's showing about 6470. So this is a massive POC right now here being generated. About a month worth of POC. And can you do these analysis any different way? Yeah. Take a look at PVP, change it to the monthlies, right? And you can see all the high volume nodes will be present to you for the monthlies. So let's take a look. So here's your monthly profiles right now, and you can see that, here's one here, high volume node, aka the POC sitting here, 6470. That's the same one that we just identified. And then you see how critical this level is going to be here. It's developing month, September POC, August value area high. They lose this level, and it's going to be really chaotic for the market. I would not be surprised if they're basically here within a short period of time. Right? Wouldn't be a bad situation for bulls, even, to refill somewhere around here. But is there any issues in any of this auction here? Does anyone see anything?
It's overlapping value.
Overlapping values are healthy, but the last one is not healthy. This one is healthy. Is there anything else?
There's a poor low.
There's a poor low.
A big gap between the 2 months.
You talking about this one?
Yes.
Yep, that would be your basically your inefficiency of the market. Try and say, hey, the value should be going higher. In terms of, there's three things that you judge the market and the way it's moving. Does anyone know what they are?
Is it the shifting value areas?
Yep, that's one of them.
Value area placement, value area width.
Volume?
Volume. So now just if you're a long-term trader and you want to understand how the market's doing, it doesn't take much to do the analysis. So we started with the value area about 7 and 7%. Cut in half, cut more than half.
So they're shrinking basically.
So what does that tell you about the auction, the facilitation of the auction? It's very important.
Owing down.
There's no other time frame buyers buying this, guys. I'm telling you, this is driven mainly by the short-term traders. Where did the other time frame participants come in? Well, they came in here. Did they know or not know? Did they have any signs? We're not going to go into it, but how do we know? So the same concept that I started a class off with, balance goes to imbalance. This was our balance, was it not? At some point, this was our high, and look where they came in. Came in very close to that retest, right? And then they made higher highs. But as they made these higher highs here, they're not showing level of confidence in the market auction right now. Right? As the value areas shift and they become narrower, what does that tell you about participation?
Dying
There's no
down.
other time frame.
There's no other time frame. The volatility is low. Let's just say that. I mean, lately there hasn't been any bad news, right? That drive the volatility. Some news will come in here and there, right? But the VIX is suppressed, right? If you go back to VIX, VIX is at the level where it's very cheap to protect yourself. And while you're protecting yourself at all-time highs with the value area shifting tighter and tighter. This is not a spot to be a long-term long investor. This is where you want to play some defense, right? And protect yourself. You think about any other big boy stocks, look at this, Amazon. Here's Tesla almost on, encroaching, I guess, 415 next week. A lot of stocks are going to all-time highs, but all of their sales, their revenues, they're all hurting. And the news are just talking about on the CNBC and these guys, market going to all-time highs. Everybody's lifting the targets. Why do you think that is?
So
So they
that
can sell it to retail.
Called liquidity, right? These guys need opportunity to sell in large chunks, and what better way to get it than get the masses to follow? Has anyone ever read anything about Truman, the 33rd president of the United States? Any history people?
no.
He said
Mason.
Well, he did have a pretty good quote, and I'll try to remember exact words, but he said that if you want to become president, focus on the dumbest part of your population to become the president.
Yes, I remember that.
Right. And when you think about that in life, right? Well, how do you get rich? The rich people, well, all we have to do is control the mind of the dumb people and tell them that it's a great opportunity to buy here. I'm telling you, be careful. The market's screaming warning signs, at least. I mentioned this one time to you guys. I think it was a year back. It was like a December or something, January, when the same concept was being, I don't know where, but it's the same setup. The values are shrinking. Placement, you had the overlap here. You had a lot of gaps, but now it's slowing down. And what about volume? So let's take a look at the volume. We talked about everything, right? About the volume so far. So I'm just going to delete this. How's volume?
Kind of sucky.
So
Flat.
I'm using 30-day average here. The blue lines tell me how many times or how many weeks had more than 30-day average. I could go more than, I could do 60, right? I could do 60 days and see my default is 30. Here, on 60 days, how many times did they cross it? The only time they crossed it on this run was when it came to a level that you should be buying, and they bought it. And then the other time that it came close to crossing is when? It's
When we
time
got
to
it
sell.
They
scared.
sold it.
And you're telling me that they're buying here? Like, I'll save that for somebody else. I'll save it for somebody else to buy. It's not a bad opportunity to start raising some cash. If you're a long-term investor, clean some portfolios that you've made some money on. There'll be plenty of opportunities to rinse and repeat, but this is not an opportunity to go long. Okay, all right, well, let's go back to market profile. So hopefully this, you guys understand. This is fairly important, and I think I've explained it multiple times indirectly now. When selling occurs above, that means responsive. If you're a seller of some product, let's say computers, and 2021 when the chips were super high, I was actually forced to buy a new PC. So for me, I was the initiative buyer because I had to get a PC at certain specs, and I bought it, right. And I was buying above value at that point just because NVIDIA graphic cards were pretty steep at that time. Normally, it's the best for sellers to sell when something is overvalued above, right? Think about the masks, think about COVID, think about those scenarios where sellers were really just raking in money on a product, right, for a short-term period. When the price goes below the value, that's where the buyer should show up, right? When something goes below value, you should know what the value is. People either know what's valuable or what's expensive. Right. So when you find value in something that you're familiar with or you've been watching it, it's not a bad opportunity to buy and wait. We talked about, if you guys remember stocks wise, do you remember when we talked about Humana? Do you guys recall this? This was our chart. While the other company was having all the bad news, and even that one was coming to our buy level, I believe it was like 242 at one point on the monthly bottom. It was opportunity to buy. Was there a lot of bad news around UNH? Yeah. But tell me who else bought UNH when it was going below value?
Berkshire.
Yeah, Berkshire. One of the, I would say, just select the A class. I'm talking about a company and a guy that's been investing for a very long period of time, and you're telling me this guy's buying UNH, but I should be terrified to buy UNH. So he's giving you a really good example of let me buy it when when the opportunity is there, when there's blood there, and Warren Buffett's familiar from saying that give me the butt of the cigarettes, the bottom part of the cigarette, and I have to make it a whole cigarette. It's somehow with value and building around it. That's what he did, right? I mean, he buys companies that are beat up. If you guys remember Oxy, I'm pretty sure, right, when he started buying, I think his average is about 46. So that kind of puts a line in the sand. It went below, and look at this candle. Whoop, he's going to start buying it, right? Not a bad opportunity for him to start re-adding it. And the wars and everything on the table. Don't be surprised if this in 5 years he makes 10x money on this. And it's like crap. Only if I would have bought it. I wanted it $4 cheaper. So hopefully this makes sense, right? Market behavior, right? So just like this chart here, market goes between balance and imbalance, right? Is there a chance you're going to be wrong many times on a bracketed market, right? Yeah, you can be, right? Let's say you buy below the market, price regains it, the low, and it goes again against you. At least it's limited, right? It's a limited reward, it's limited risk. When you have a trending market, right, that means first they disagreed on the bracketed market, and now the price is going to go in search of buyers or search of sellers, right? Higher to find the sellers, lower to find the buyers. So when you think about this, the balanced markets is a fair price. Everybody's happy trading. And the best way, I can give you guys scenarios on how to trade the markets or bracketed markets is going to be here. And if you stick to the rules, I think you would do well, right? So I'll give you just quick examples, and this applies market profile, whatever this is more of a price action than anything else. So let's say that this is the bracket that you're trading in, right? So there's only a handful of scenarios you have to. Let's say you're trading in here and you're going in here. You go above. Once you lose this is a great opportunity to start setting up a short position, and you can use whether it's recent highs above as a stop loss, but ultimately you would target the POC in the middle, and then the bottom would be highly likely that it's going to traverse. And this would be your opportunity to go short on these fades, right? Look above and fail. This is the opportunity here, right? So that's something that I really like this setup. And then you also have the look below and fail, right? So let's say we're trading, and goes here. You reclaim the range low. That means you're coming back in the acceptance. Then you're looking for long opportunities, and you're looking to drive this upward. So look above, look below, fail. I would always target the POC in the middle, wherever that is. Typically 50% of this range is what you want to target, right? So if you go here, somewhere around 50% is what you want to target on these. And this happens, I would say on every time frame, not only, higher time frames, but this happens on every time frame possible. So let's take a look. Here's your SPY, right? Let's use this. These are low because there's a rejection here. There's a little bit low here. There it goes. Anyone see any certain scenarios that would work?
Pretty much what you said, buy the bottom, sell the top.
And use the confirmation of peak above and fail back inside. You had one that was here. That one worked pretty well. I would say that one would have been nice. Right here, they came back, they didn't really test it yet. So here, if they do this and lose it, then you have an opportunity to drive it, right? And it's pretty tight, right? This is about $3 on SPY. So I'm using smaller time frames, 3 minutes. So that's something that I would look for when you're trading. And this happens a lot. And when I say a lot, guys, it depends what type of trader you are, but this happens a ton. And market is constantly going between balance and imbalance. And if you can look on any smaller time frames, especially in this chop, you will see that it works pretty well. It's just you have to be patient, and you have to be sitting for your setup and execute it properly as well. Identifying is one part, but executing is probably just a little bit harder, and pulling the trigger and making sure that you're accepting the risk as well. Okay, let me talk about this. I would say, this is hopefully clear. Trend is divergence of price away from value. And when that happens in market profile in the last period, that's what spike is. you're going away from value during the last 30 minutes, and we call that a spike. Bracketed ranging market, this is just a two-sided activity, short-term traders. Keep this in back of your mind whenever you're trading, right? Which way is market trying to go? Is it doing a good job in getting there, right? If it's trying to go higher, but it's not doing a good job in getting there, then you should be somewhat cautious, right? Either there's a large block order, something's preventing it from getting there. Talk about this. Okay, so I think last class we came to all of these concepts here. We covered all of these. So I'll give you guys a second and see, is anyone not comfortable with any of what's posted on a chart?
Just a quick question. So the letters, how did you split it? Like that stacks up one next to each other?
I'll show you that in Trading View. Anyone? Everybody good?
Sorry, what was the question?
Yep.
Does everybody understand everything that's outlined here? Because this is what we covered.
I had
Yep.
questions on like what's the difference between like excess and buying and selling tails?
It's the same thing. That's just the naming.
Okay, yeah, because I got that question wrong on the test.
Yeah. It's good that you understand it. So yeah, access, unfair high and unfair low is the same thing, or buying or selling tail. Why is access at the top called selling tail?
Because that's
They
where
found the supply and they sold.
Yeah, there's a lot of supply and the price was unfair at the highs, and then they sold off from it. Unfair high or access low, that means you found the excess of demand and people stepped in and price was unfairly priced low. They stepped in and bought it. So that's the naming explanation of all those.
and that would appear as like second or third standard deviation on volume profile.
On volume profile, it would look like a skinny line, meaning it would not have much volume on the bottom, right? It just shows up something like this. So let's show you that. So whenever you have kind of tapering volume, like so this is your volume profile and it goes like this, it would show up like that, right? So here's, for instance, you see how the volume is kind of like pointing here. That usually will mean that you found some excess here and that you bounce from it. When it's a hard cutoff, right, where it's a pretty hard cutoff like this, that typically means it'll be revisited. Sometimes it leads to poor highs, and you'll see it. Let me see if I can find a good one. Where it has kind of like a cutoff bottom on volume profile. But that's why I use market profile to find those and look on volume profile.
So you
like
would
this.
never have access within the profile. That would be single
Yeah,
print.
yeah, exactly. Within the profile, it's single prints, right? That's the division of it. So access on the top and the bottom, and single prints show up in the middle, usually separating the value. So if everybody's good with this, right? We talked about this briefly, right? There's other nuances that you guys need to be aware of, right? Sometimes, depending on how the market's behaving, right? There's something called the mid on market profile. And that's nothing more than a halfback or 50% of that day's range. And you guys will see it here shortly. So, 4.
What does the mid communicate to us?
I'm about to get there.
Oh, sorry.
I just need it to pop up. Oh, I'm on SPY. I'm like, man, why is it? Is anyone else PC or trading me this slow or just me? Not there again. Okay, somebody asked 2 questions. I'll answer one by one. Somebody said, how do you split those? So if you click on the TPO, they'll be under style, it'll be expand blocks, and then you'll have expand the last profile. I'll just expand the last profile. You could expand them all. Typically, I don't expand them all, but this is what it would look like, right? You will get basically, you will get both of them. You'll get the one that's combined and the one that's broken down, so you can see how's it developing. And basically, you just double click on that and click here. Okay.
There's a question in the chat.
Yeah, I can cover something. So now if you talk about the mid, right? So you do have a couple of settings, right? If you want poor highs, poor lows to be identified, you could do that. Single prints, you could definitely identify them as well. Value area high and low, that should be known. TPO midpoint, right? So there's a question about that. Whenever you're trading, right, there's a perceived value of discount, right? Is that 50%. So whoever asks, right, if you're wanting an iPhone right now and somebody's like, hey, I'm going to give you 50% discount on iPhone 17, would you be interested? Well, the interest on that should be higher than at full price, right? You should have a little bit more demand coming in at that discount. So the reason for the midpoint is that it's a perceived value of discount. So this midpoint here, or halfback as we call it in market profile, is just a perceived value of discount. And it's not a bad idea to know it sometimes, right? And see how the market behaves around it. Especially when you have nothing else the market's given you in terms of information. We had one day not too long ago, well, maybe it was this profile here. I don't know when it was, but it was profiles like this. What can you make out of this profile? Here, I'll give you this profile and tell you, give me analysis, and it looks like this. There's really not much. Like, you have no interest on top. There's, some access on the bottom, but it's not like you built one of the profiles of trading based on the curve, right? It really doesn't look like anything. It's not a bad idea to be like, okay, well, let me kind of find where the midpoint is in this case, right? And let's say you just draw the midpoint. We'll extend it right, and then you see now the perceived value of this is if you're trading above this, above here, then they found some value in the bottom, they go above, most likely they're going to come back. They come back, they should be buyers here. They lose that tells you that the value here, that perceived value of that day, 50% is not great. So you can make decisions based on the halfback of that day, right? And like, let's say for Friday, right, our halfback would not be, would it be meaningful for Friday to have halfback play a big role?
No, because compressed volume.
It's compressed action, the range is tight, it's within the value of the prior day. So, the midpoint doesn't play a role. I typically only use it, when there's nothing else on the chart that gives me any clue. I use the discounted value of the halfback. Does that make sense? It just tells you that 50% line of the market profile and where's the discount line, above, below.
Yeah, makes sense.
It's not, don't rely on it too much, I would say. It's good to know in the days when you don't have anything, but it's not like something that's like, oh my God, right? And it's basically your high and low divided by 2. That's all it is. High, low divided by 2, and you get this, right? And I think it's more actually relevant to, I would say, I think it's a retail psychological magnet more so than anything else. So at least that's how I would, it could be your, I would say, if you're trading high, you're shorting the top, it could be your initial target for a price target, meaning you're short here, use that as your first opportunity, right, to take your profits. Does that make sense?
Yeah.
So the midpoint, the axis, I think we talked about that, right? Axis just means that you have found either the top or the bottom, unfair high, unfair low. As we know, we have two types of market participants. You have short-term and long-term traders, failed auctions, right? That means that you have unfinished business. And typically in unfinished business, right, the market will auction away from it, right? And then eventually it'll come back to it, right? So if you take a look at this one, remember we had access. We had the, I'm sorry, not the access, but we had the spike here. Do you guys remember this one? So is this spike, for instance, important? Do you carry this forward in your analysis or not?
Yes, because it was untested.
Yeah, it was untested. I mean, so now let's say if this was to crack, oh man, it opens up, some bigger problems for the market, especially because of this profile here. I think this was the NFP print, right, on Friday. And then they sold off, they left all of these single prints. And what do you see? Like I mentioned earlier, usually those low volume nodes or single prints, they tend to be tested, right? And you see how they filled it up basically here. That means if I was to combine, so if I was to combine, for instance, this profile with this profile, and then I combine it with the next profile, look what happens. This profile goes what? It just becomes like a regular D-shaped profile. While it looked like a lowercase b, now it looks definitely more like just a regular profile. So they filled those LVNs or single prints on that profile, and they basically generated a full-on value in between. And now you can see, this zone becomes somewhat important, right? As they come back, most likely they'll come back here. You lose this, well, what does it mean? Well, let's just take a look. We'll extend this guy to the left, and look what does that mean for a lot of you, right? You can make some assumptions, right? There's no price to the left. That means this is our recent highs. They rejected it, they peaked. If they can't hold this level here on the retest, well, probably very, very, very high odds they are going to be coming at least to the bottom here, the reversal. Failed auction, right? So this is important for you guys to understand, right? Especially the IB, the failed auction, right? If we break initial balance and fail to hold for 30 minutes, then most likely we will revisit the opposite extreme of IB. Have you guys ever seen this play out?
Yeah, a lot.
This plays out a lot, right? And why do I bring it up? Well, I bring it up because it's a good setup for you guys to pick up and trade, right? So here's the initial balance. I'm just going to hide the TPOs. And what do you know about this one? So this one here spent 10 minutes above. And what did it do next? When it got back inside. Went to the lows, then it went above, spent a lot more time. Almost came, to IBH, which would make this day, what type of day? When it reaches the 2x of initial balance.
Monday?
Mm-mm. It's on
Is
your
it
test.
normal?
A lot of you guys got it right. Standard typical would be the day, right? If you reach 3x, then most likely that becomes a trend day, right? Why does the IB width matter?
Participation. We'll know who, if the other time frame participants are in or not.
Yeah, and who's typically the one breaking the IB?
Other time frame participants.
Other time frame participants. So if other time frame, think logically now, if other time frame participants are like, hey, we want to go higher, but then immediately brought back down, was this other time frame participants?
No, they're responsive.
That's responsive sellers, and basically there was just a trap for the longs, right? When other time frame participants coming, the retail can't stop them. The only thing that can stop other time frame participants is another other time frame participant that has a lot of access. And if you see that they, for instance, like this one, doesn't have a lot of access, right? This was mainly driven, I would say, by retail. And if you look at the price action of these weak, higher highs and compression and then a spike, somebody was like, okay, well, let's just give them the inventory. And then phew, all these guys that started buying this, let me buy the dip, let me buy the dip, buy the dip. And eventually, they gave up here, and that's when the price went up. So when the IB fails, and if you can't spend 30 minutes above it, it's usually either the next day or within a few days. Most likely, you're going to revisit this auction. And for instance, this is why I said this was a key level, right? There's a lot of reasons why it's a key level here for Monday. But, you have the single prints when somebody asked, right, where are the single prints? Well, the C period here is by itself, meaning there's no period next to it. Therefore, we treat this as a separation of value. So for for Monday, this is our value here and the value here. If they lose this, we're going to go to the bottom of this and most likely, I would say enter somewhere all the way to about 65.35. Does that make sense?
I see that you're on the 5-minute chart.
Mhm.
It doesn't change the information whether you're on the 5 or 30.
No, it doesn't. 30 minutes would just give you one period block here. So if you look now, if the TPOs come up, when they come up, I guess, you'll see that each letter, if I was to split this, is going to be just a 30-minute candle. So here's one candle here. So if I bring them to the front, let's do this. So you see this now? You're able to see every 30-minute candle is just one letter.
Right.
A, B, C, D, and so on, right? It's just that. But these, to me, it's a little bit more visually appealing. The way you play the single prints, right, and especially tomorrow, they can be as a support and as a resistance because they're crucial in separating. If we were to do something like this, let's say at open and reclaim it, what do?
Go long.
Do not fight it. I promise you're gonna lose your account. There's a high chance that you want to go long here, right? And you can use the low here as a stop loss. Let's say they open far from it, right? And then they're driving here and you see the auction slowing down. This becomes a pretty good short that you can target for lower, right? So it could be driving some of those open drive types, right? Where you have an open drive, which would be more bullish, right? Then you could have another one that's open reject reverse. So you could pay attention to see kind of what's happening, right? Those drives are meaningful, but not that meaningful in terms of trading, but at least you would know what you could expect with the single prints. They are division, they are critical support and resistance in terms of value, acceptance, and rejection. So I would definitely make sure that you guys understand it and how to trade it, especially in the uptrend. This is more looking like peak below, reclaim and go long than something like this, unless there's some news that come in tonight overnight. That would change it, but I don't think we're going to get something tonight. But on a higher time frame, like I mentioned, guys, the auction is slowing down drastically. Just giving you warning signs. It is slowing down like really, really, really fast. Let me give you guys on a weekly time frame so you guys can see it. So here's your TPO, and typically what I would say when you guys are looking at market profile analysis on the weekly, make sure that you look at this with a clear eye what could happen, right? So here's your single prints that we just talked about, right here, right here, right? So that's one distribution here, and then you can see the next one is starting where at 65, 62. I think it goes all the way to the bottom to the weekly, and the weekly has what? What
Or
is
low.
this?
Low?
Yeah, this is a weekly poor low. Maybe not tomorrow, but sometimes very soon by the end of this week. There's a high chance we're gonna come back and clean this. So now, what type of profile is this week looking like?
Double distribution.
Yeah, double distribution, which means that if you go here, for right now, this is being treated as 1. And this is your second one, right? So if you can't hold this, right? Most likely, if you can't hold this where we are right now, there's a very high chance that we're going to be heading back to at least 65.13. I would say this is a very high odds. But considering you have a poor low, the price will navigate towards it to fix it. So something like this. And I'm just giving you analysis how I would look at this right now. And then somebody talked about halfback. It might not be bad to be like, okay, well, where's the halfback? So this would be my weekly, and I would carry more about weekly halfbacks than actually daily halfbacks if I was to chart them. So this is my weekly halfback. That makes sense, right? In the middle, right here, middle of the auction as well, and the POC navigated to the top. So now, if you can't spend price, if you can't find acceptance here, and it peaks, that would be disastrous, right? Now, if I put something here to the right of it, the volume and time are being spent up here, right? So there's a very high chance you lose this level that we're going to have a liquidation on the top. Does that make sense? How we did it? Does it not make sense?
Sure. When you did the weekly, you always start from Monday, right?
Yeah.
Okay.
I'm on our page. You can also do the monthlies, right? I mean, you can take a look at this and go maybe a little higher candle time frames. But here's this, right? So now zoom in, and how's this looking here? Does it look like a clean low? No, so far, September has a poor low, right? And how's the value doing on TPO? It was shift, 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 and now we have for the month of September we have, I would say, a little bit of an overlap, right? With where the prior month value area high and this POC are perfectly aligned. I would say, what are the odds of that 04 and then 89 being tested? Probably very high. Otherwise, if they can hold this, what could happen is if they hold this area right here, what would happen to this value? Low.
Shift upwards?
Yeah, it would shift. So value area high becomes, and then maybe value area low becomes. So it's a shift. That would be a pretty good shift, because right now this shift's a little scary because it's really in the bottom of this distribution here that's remaining. So let's see what happens, right? I'm just noting down what they have, how they can play it. Does that make sense so far?
Yes. Shorty, going back to the IB fail strategy that we were talking about. So yesterday or on Friday, we went above the IB and it came back into IB. It failed. So it happened twice.
That's correct.
So does it matter which one is a better play, or
No.
it doesn't matter how
No.
many times it happens?
I would play it every time.
Every time.
Especially when your range is 14 points. The odds of you going through and giving you 14 points is very high. If this IB, let's say, if this IB was, instead of, 11 points, if this IB was 29 points, and you can see the averages, right? Today was 10, super small. 20-day average is 30. Well, if the average was 30 points and then it happens, the odds are that you're going to get it all the way down are fairly much lower, right? Because you have to traverse a lot more points. There's odds that there will be buyers in between. But when it's 11, 10 points like this, pretty good chances you're going to play out and get your reversal.
For anyone struggling, what I started to do a lot when I was still really having a hard time like keeping consistent profits was I really studied the market profile, and then I try to like figure out what kind of day we're having based on the first couple periods, and then try to make my trade after that. So I wouldn't trade before like IB's set, and I would really try to see like what kind of day that they want to make happen, and then from there I would try to pick my entries and see if I could predict, or not, I mean predict based off the information I was given early, what kind of day we're going to have. And as long as I opened up my stop a little bit, even if my entry wasn't perfect, and I knew and I figured out what kind of day we were having, I was a lot more successful with getting, my trades to work out.
Yep, that's good feedback. And I would say most of the time, not all the time, that will work. And that will work for the simple concept that once you know what type of day is forming, you can make some conclusions just based on this chart and what to expect. Normal days, wide balance, most likely you're not going to have extensions. So how do you play it? Well, if I'm having a wide balance day and we go below the value and then we regain it, that's a screaming go long, right? Normal variation very close to the normal days just goes up to the 2x, right? And it stays there, right? And if it goes, right, if it's leaning more bullish, you can play the POCs for long. If they crack below it, and then they give you an opportunity to go, especially because the wide balance here as well, right? And I would say the balance is still decent here. But if they give you the opportunity to get this after visiting the IBX on the upside, and they give you an opportunity on the value area low, that's a pretty good chance that you're going to be profitable on that trade. Normal trend day, these are, I would say these are your P's and lowercase b's. Usually they drive price aggressively. They don't stop, right? And this is typically controlled by long term, right? It's an imbalanced market. Double distribution trend day. So this and this one here go hand in hand. But at one point here, they were not sure. Once they accumulated, and then they basically went up. And usually in this type of day, you get single prints. You will find those single prints just like we did on that uppercase, I would say, no, I'm sorry, on the P shape. But on a true B shape, you would have a distribution just like the weekly that we just looked at, right? So the weekly profile that we're showing here, let me go. So you see this, right? So this is a B shape, right? At one point, they're agreeing on value here. Then they had like a little gap and they said, okay, well, let's not go back to that value. Let's go higher. Now they're building value higher. So if they lose the value higher, right, that's not a bad opportunity to, again, drive it somewhere to the bottom of it, maybe even to the 65.12 level. Does that make sense? That's the double distribution day. If you find balance, perceive it, that balance to be either unfair high or unfair low, and then you basically away from it. A very small initial balance, why does that matter? Well, it matters because if it's a very small initial balance, most likely you're going to break out of that balance and you're going to create a balance somewhere else. Two balances created creates what?
Double distro.
A double distro, right? So that's why, Shamu here said, well, this helps a lot. And sometimes I will tell you guys early in the day, it looks like it's kind of looking like a lowercase, B or a P, just depending on what's happening and where we are in context to the market. And it's a pretty good habit to create to relate it to these neutral days. These are the ones that kill people. Is you're expecting something happen, it doesn't, right? There's no long-term participation coming in. I would say smaller IB than normal day, right? So, and typically these days, I would say maybe even Friday, if you guys take a look at it, it looks to be more of a, is this a true B, lowercase b form? No, it's a compressed B, right? They might be trapping some shorts here. So they might give them another look tomorrow, right? And how do you trap more shorts after you trap them here? Is you give them a peak below, give us the single prints, and then you go higher, right? That would be the ideal scenario that you do. If it was a lowercase b, right, and typically it should look like something, I would say like this. where you have a nasty top where you liquidate them and then you build the value in the bottom. And then, of course, the next day you come back gap and reverse it all. Does that make sense? I think it's fairly important that you guys know that, right? And then in terms of, I would say the confidence, this is how I would kind of rank them, right? From neutral all the way to trend day, neutral, normal variation, double destroy. This is just your kind of conviction and type of auction that you can expect, right? Normal variation, you'll have a nice range, nice movements. Double destroy, same. You'll have accumulation, then nice drops. And trend day, you're just going to keep going up and down, not really making a lot of lower lows. And then trend day up, not making a lot of higher highs on trend day lower, right? So I would say this is fairly important that you guys review this and at least understand this as much as you can. And the best thing you can do to make yourself a better trader is to go here. I would say, and come back to this and say, hey, let me identify some of these days and see if they make sense, right? Go through them and kind of look and see that do all of these add up to a single day, or maybe sometimes you won't have a day, but compare the initial balance, compare the range. How does the price behave in terms of initial balance extensions? You know, does it stay within 2, 3? Those things, just so you can kind of start building out and see, like when the trend day was there, was the C period the one that broke the initial balance, or was it another period? If something is valuable, do people wait for it? If it's at a really good level, how many of you guys wait for something to be bought if it's like an amazing price?
You don't wait, you just buy it.
You just buy it, right? So when you think about stock market, when something is perceived at advantageous price, you shouldn't spend a lot of time there, right? And if you're seeing price spending a lot of time at something, right, where it shouldn't, then, you know, it might not be bad to kind of take a look at it and say why. But that's the next steps that I would want. Based on the scores that you guys had on the quiz, I would expect to see the quiz numbers kind of go back higher after the retake of the quiz, right? I think the average was about 22, which was the median score. So I would expect if you took the quiz, maybe take the quiz again after this class here and see if your understanding is better or worse. I think for the next class of quiz, I'll probably add some questions whether, you know, hey, do you go long or short, with the answer being, you know, the market dipped or didn't dip, kind of give you the idea. Does your logic, what you learn, applies correctly to what type of trade you could have executed? And I think once you're able to understand the theory and put it in practice, not only, you know, is trading itself the best practice, actually you going and trading away and taking trades, but a lot of you do trade, I would say, the fake accounts or funded accounts where you're just a guinea pig for their money. But try to take $500, put it in the account, and trade one MES. And believe it or not, some of the folks that that are on Shorty's diet, where I help you and I meet with you daily, weekly, sometimes daily, depending on who you are, to get you to the profitable mindset. A lot of you guys are making $2,000-$3,000 on MES, trading 2 MES. And that's pretty good. Just think about it. If you're consistently for 4 or 5 months making 2-3K trading 2 MES, now convert that to like 1 ES. Well, that'll be, at least 3 times the money that you're making. But the concept and the idea is for you to learn the ritual, the discipline, the setups that you can repeat it over and over and over and over again. And you have to let the trades play out. And a lot of you learn how to let the trades and visually see it is when you're risking less. But when your account grows to, let's say, $100,000-$200,000, you can afford to have a hit of, let's say, $400. It won't be big. But if you have a $2,000 account and you get a hit of $400, that's a pretty painful hit. So if you're struggling, I say the first step, size down and then start taking these trades. Once your account is, grown and you have the opportunity to do that, you can shift and increase your size. But, increasing your account from 2 to 5,000, you still are not in the level where you need to be to trade ES. I would say minimum is probably to be around $50,000 to $100,000 and you trade ES, but your mindset will tell you when you're ready for it. when you're eagerly pushing to trade DS, then you get greedy and then you want more money quicker and then you kill that account. And then you go back to smaller account and you do the right things and then you shift to longer account, then the greed kicks in and then you're like, oh shit, I lost my money again. It's because you changed the rules the way you're playing. So, and a lot of you guys suffer from that. So I would say scale down, learn some of the concepts that we talked about, the setups that we talked about. I will most likely add within a 2-week period, I can add the setups and the quiz with the next phase where you guys take the quiz with the knowledge of market profile and what, you know, the trades would look like in setups and see how well you would do. Then you can take your own log, right, where you take the trades, if hopefully you're logging, and you take a look at it and see where did you make mistakes? What was market telling you versus what were you doing? And that's the best analysis you will do for yourself as a trader. Market was giving me these answers, but I was ignoring them and going off of my gut feeling or emotional cloud that got into my head, and I ignored everything and I did that. Well, I'm gonna make a stop here because I have to go to my sister's birthday. I will definitely post a quiz if you guys don't mind taking it. Take it seriously so that way we can kind of track and see your progress. Some folks, I think at least 3, I don't think you guys took it seriously, and I would appreciate if you guys do, just so we can help where you need help. And I would think that eventually, within a couple of months, you will be at least fluent in market profile language, and you'll be fluent to understand the setups and take them. And that's the best you can do for yourself, especially when the whole, you know, I would say the rest of the world and US is going more towards AI. This is going to be probably the only job that you can keep and be your own boss and not worry about if somebody's going to kick you off or not. So think about that, but I'm here to help. As you guys know, I do offer you guys one-on-ones, and I've had a handful of them these past 3 weeks. And some of the results that people have shown, I'll post it in the chat. One of the newest ones that came into the, let me post it here. And the discipline that this trader is showing, let me bring it up. He's been on the diet since 8/29. What do you guys see?
13% account growth.
A lot more green.
A lot more green. His losses are minimal as well. There's good days, right? And you see that how many trades is he taking? 1, 1,
2 max.
1, 2 max. 2 require approval. Typically it's 1, right? And you can grow your account at 13% week over week. Either if you're not happy with that, you don't understand compounding, but 13% weekly would be a lot. I would say it would be a lot to grow at 13%, you know, and if you're not familiar, just take $1 and put it at 13% and see how well you do on that $10 investments over a couple of weeks. Okay. All right, guys. Well, thank you for your time. Hopefully we clarified some of the stuff and added a few things. There is one more section that will cover a market profile. It's kind of putting it together along with the mindset and reading the internals and applying to your trading, which probably be the most crucial piece as well.
Hey, Shorty.
Thank you.
Yep.
Shorty, where's the new PowerPoint? Because this one is that we all have is version 4 from a year ago. Can you post the version 5 for us?
Yeah, I'll post it right now.
Okay. And where's the quiz? I missed that.
Yeah, I never saw the quiz. Sorry.
I tagged you guys in there, but I think for you're out. So, but I'll tag you guys here in a few minutes.
Thank you.
Alrighty. All right. Well, thank you guys. See you soon.
Thanks, Shorty.
Have a good day.
Shorty.
Thanks, Shorty.